Alright, let's break this down. Before we even get into Bitcoin, we have to talk about money. Think about the cash in your wallet, or the numbers in your bank account. What is it really? It's just a system we all agree to use. We trust that a $20 bill can buy us lunch because the government says it's worth $20. It's a promise, a shared belief that allows us to trade our time and skills for goods and services, without having to barter chickens for a haircut. This system works pretty well for the most part, and it's what we've used for a very long time. Now imagine a new kind of money, one that isn't printed by a government, or controlled by any single bank. Imagine money that lives entirely on the internet. A digital currency that you can send to anyone, anywhere in the world, almost instantly, without needing a middleman to approve the transaction. That's the big idea behind Bitcoin. It's a complete rethinking of what money can be. It's designed for the digital age, aiming to create a financial system that is open to everyone, and not managed by a central authority. It's a bold experiment, and honestly, it's why you hear so many people talking about it. The key difference here is control. So, let's get into the specifics. What is Bitcoin? At its simplest, Bitcoin is a digital file, like an MP3, like a JPEG, that you store in a digital wallet on your computer or smartphone. Each Bitcoin is unique. You can send a whole Bitcoin, or a tiny fraction of one to another person's digital wallet. Think of it like sending an email. But instead of sending a message, you're sending value. You can send it to anyone in the world, no matter where they are, as long as they have a Bitcoin wallet to receive it. It's money that's native to the internet. The biggest thing that sets Bitcoin apart from the money in your PayPal account or your bank is there's no central company processing everything. When you send money with PayPal or your bank, they act as a trusted third party. They check that you have the funds, they move the money to the other person and take a small fee. Bitcoin gets rid of this middleman. Transactions are processed and verified by a massive global network of computers, run by volunteers. This network keeps everything honest and secure. Okay, so this digital money sounds interesting, but how do you actually get your hands on it? For most people, the easiest way to get Bitcoin is to buy it. You can do this through what are called cryptocurrency exchanges. Think of these like a stock brokerage, but for digital currencies. You can use major exchanges, sign up, connect a bank, and buy Bitcoin. Connect your bank account and buy Bitcoin with dollars. You can buy a whole Bitcoin, expensive, or buy a tiny fraction for just a few dollars. Once you buy some Bitcoin, you need a place to store it. Mobile wallet apps on your phone, desktop wallet software on your computer, or a hardware wallet. Offline, like a USB device. So what can you do with it? More businesses are accepting Bitcoin as payment. Large companies and many small online retailers accept it. But it's not really for buying coffee widely yet. Many use it to send money across borders. Banks can be slow and charge high fees for transfers. Bitcoin can move money in minutes for a small fee. Many buy Bitcoin as an investment, a store of value. People call it digital gold. They hope its value rises over time due to limited supply and adoption. That long-term demand helps explain Bitcoin's popularity and big price moves. Now for the really clever part. How does this all work without a bank or a company in charge? How do we know that someone isn't just counterfeiting Bitcoin or spending the same coin twice? The answer is a groundbreaking technology called the blockchain. The blockchain is a public ledger, a giant shared spreadsheet that records every single Bitcoin transaction that has ever happened. Imagine a massive digital accounting book distributed across thousands of computers around the world. Every person on the network has a copy of this book. When you send Bitcoin, your transaction is broadcast to the global network. Special participants called miners bundle your transaction with many others into a block. To add the block, miners must solve a very complex mathematical puzzle. The puzzle needs huge computing power. The first miner to solve it adds the new block and is rewarded with newly created Bitcoin. Once a block is added, it's there forever. To change an old transaction, a hacker would have to resolve that block's puzzle and every block after it before the network adds the next one. That would require more computing power than the entire rest of the network combined. So, blockchain is described as immutable, practically impossible to tamper with. That security is what creates trust. Trust in Bitcoin doesn't come from a government or bank, it comes from mathematics and transparency. Because the ledger is public, anyone can view and verify it. The rules are the same for everyone, enforced by the network through public record keeping and competitive puzzle solving. It's a system that creates trust through decentralization and shared verification, a revolutionary idea for handling digital value. So why has Bitcoin generated so much excitement and attention? One of the biggest reasons is its potential as a hedge against inflation. Governments can print more money, which reduces the purchasing power of savings over time. Bitcoin has a fixed supply of 21 million coins. Many see it as a way to protect wealth. Digital gold. They call it digital gold. Another major benefit is financial inclusion. Billions lack basic banking services, but many have smartphones and internet access. Bitcoin lets them join a global financial system without a bank account. They can save, send, receive money with just an app. Start online businesses and receive remittances without high fees. A clear cost advantage for cross-border payments. However, it's not all sunshine. The biggest risk is extreme price volatility. Bitcoin can swing 10% or more in a single day. Some have made a lot of money. Many have lost significant amounts. It's a risky investment. Never invest more than you can afford to lose. The Bitcoin network is secure, but you must protect your digital wallet. Lose your private keys. Your Bitcoin is gone forever. There's no customer service to recover it. Governments are still figuring out regulation. Rules can change quickly and impact value and usability. Keep these factors in mind. So what does the future hold for Bitcoin? No one has a crystal ball, but Bitcoin has started a major conversation about the future of money. It has proven a decentralized digital currency can work and be secure without a central authority. It has challenged the status quo and forced us to rethink what money is and how it should be managed in an interconnected world. One potential future: Bitcoin as a widely accepted store of value, digital gold, not necessarily for groceries but part of a diversified investment portfolio. A global asset people hold, and institutions may hold too. As adoption and infrastructure grow, it could be a foundational layer for a more open financial system. A neutral settlement network for large global transactions. New tech being built on Bitcoin, such as the Lightning Network, aims to make transactions faster and cheaper. That could make buying a coffee with Bitcoin as quick and easy as using a credit card. The bigger impact may be the wave of technological creativity reshaping finance, art, and identity. New ideas about digital identity and how we identify ourselves online. In the end, Bitcoin is a fundamental choice. It offers an alternative to centuries-old financial systems. It could become the global currency of the future, a niche asset, or something in between, but it already has lasting impact, and its journey is just beginning. It has empowered individuals and sparked a movement toward financial sovereignty. Keep an eye on it. Its influence on finance and technology is only getting started.